Jana's business has opening balances and 1st October $1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any. She has the following transactions for the first week of October. October 1st, Jana put her own money into the business bank account, 8,000. Bought goods for resale on credit from Dev. Paid rent by debit card 1,000. Sales on credit to cash sales 700. Cash into bank 500. Paid money owed by check after deducting a 5% cash discount. Paid stationery by cash 30 bucks. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put her cash account. So obviously opening balance cash account. Bank account or cash book. So this will come in cash. Okay. So this is okay. So even discount will come in this, but discount account also we have to prepare. Okay, then I put her own money into the business bank account capital. Bought goods for resale on credit from their purchases and their paid rent by debit card rent amount. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash into bank account contrast so that we go to cash book itself. Paid their money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. Put in discount. Received account. So they were in bank. For example, you have paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, and 1 cash book. So cash book, this is ledger account as book of prime entry. So this is. So first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you are not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this, and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October. Cash 1,000 2,500. 1,000 cash 2,500 in bank. So it is balance brought down. Balance Then Jana put her own money into the business bank account. Own money. Okay, own money is nothing but capital. It's nothing but capital. So Jana has put her own money into the bank. So money is coming in bank. So money is coming in bank. So and what this is first. So it is on first itself. Okay. On first. So money is coming in bank, debit bank account, and who is the given? Who is giving it? So it is capital. So complete the entry. We have right here. So it is bank by bank. We received through bank. Next, bought goods for resale or credit from the 5,000. Purchases. Purchases 5,000. So what date? Date is on second, October 2nd. October 2nd. So purchases account debit. They account credit. They account credit. So again this year right there. Again this year right purchase. So the entry is complete. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1,000. Debit card bank. Rent and bank 1,000. What date it is? Second. Rent. Money has gone out from bank. Yes, so rent account, money has gone out from bank. So it will come here. So next, so we have recording the opposite side in rent. So rent account. So 1,000. October. Bank we have paid. So rent account is an expense. Nominal account always debit. Next. Sales on credit to Yash. Sales and Yash. Sales on credit to Yash. Sales. What date? 4th. Sales on credit to Yash. Sales on credit to Yash. Big amount. 3,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting? Because we have sold the goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming.
date 4 cash sales 7 4 cash sales means money will come in cash account sales. So we are receiving money in cash through sales. So sales account will be related. Sales. So cash is 7. We wanted 4,000. Paid cash into bank account. Paid cash into bank account. Bank account paid. 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. On date 5th. Cash is coming. Paid cash into bank means money is coming in bank, but going out from cash. So here, so it is cash payment and bank receipt. So 50. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your trade bank. So against this, your trade cash. Next. Paid the money owed by check after deducting 5% cash discount. So whatever money we have to pay it there. So we have bought 5,000. Goods were 5,000. And we have to pay after deducting a discount of 5%. On 6th we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid there 250. Discount received is 250, and money is going from bank 4,007. So to whom we have paid? We have paid to them. So to them when we have paid? We have paid on October 6th. How we have paid? We have paid bank 4,750 and discount received this discount received. Here it is discount received. What date? Only amount on 6th. For the 6th. Cash. So we are trying to. So next. Paid for stationery by cash. 30. Paid for stationery by cash. 30. So one. It is on 6th. Paid for stationery by cash. 6th. We have paid stationery. By cash. So money will go out. 30. Stationery. Stationery. Money will go out. So what you have to do? You have to write in stationery here. October 6th. So through cash, we have paid stationery. Cash stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. Now we have to balance. How do we balance? So what is the most important account here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1000 plus 4750. It is 5750. 10,000 minus 5750. So what you have to do? You write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5750. Here we will get 10,000. So 10,000 minus 5750, we have to subtract 1 from the other. So 10,000 minus 5750 is 1,000 minus 5750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried out. So balance carried out. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 1,170. So you write down 1,170. You write down 1,170. So that the total on both the sides become equal. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried down is 8,000. So this will be carried down, two balance carried down. So we become by balance bottom. By balance bottom. So only the dates will change. Here it will be October 7th. Here it will be October 8th. Or October 7th. So balance. So then. So purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just, this will directly go to the trial balance. So they will account. Here also 5,000. Here also 5,000. So there is no question of balancing here, because the total on both sides are same. Rent account. This will be straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write that total. So this will go to trial balance. Yes, account. So balance credit. Balance credit term is 3,000. So this will be brought down again. Balance brought down 3,000. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is will be straight away go to trial balance. So this is the end. This is what else we need to do in this. To balance the accounts at first and bring down the balances. Okay. Balances. This is how we have to do this balance. Yes. So okay. So we'll catch up in the next class. dear friends, let's continue with activity 1.2. So this is David Hopkins letter 2. This is from David Hopkins letter 2. David Hopkins letter 2. So complete the entries for the following table. So name of accounts to debit, name of accounts to debit. So what you do basically you start with your own. You see the question and answer yourself. Then you can compare with the answers. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what also. So credit what is given away. So it is bank. So money is given. So bank. So we are going to bank. Paid rent. So rent is an expense, right? So rent is an expense. Debit all expenses in the system. So postage and stationery paid. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only. Postage. So here, why what money is given? Wait, what? Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or it is given account, so money will go out from the bank. So here will be telephone. So heating and lighting bill paid from the bank account by standing order. So heating and lighting. So heating and lighting. Paid wages by check. So what is happening? Wages. Wages for by bank. Why? Because money is going out of the bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent received. So you specify because rent can be paid. See here rent is paid. So it is rent is received. So or you can write rent expense account or rental income account. So, so rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received. So again, interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So then loan received from a friend, B. So what is happening? We are receiving loan from a friend. So all the transactions are assumed are through bank. So you write money is being received in bank account. So but who is giving it? It is B who is giving. So credit the giver, credit the account that gives. So so B account. Bank account, B. So money is coming in bank and B is the person. B is the account that gives. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we repay, the loan Lee will receive. So Lee account will be debited because debit the account that is. So B is specific. B here, which account will be debited, which account will be debited. You have to be very clear. So then purchased, purchases paid by debit card. So whether it is debit card or check or whatever, always it is money will go out from bank. So purchases upon debit to bank. Because money will go out when you pay out from bank. I mean, debit card obviously will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is the revenue. Sales is the revenue. Sales is the trade. So create all incomes in here. Revenue. Return goods to supplier and bank the deal. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the return goods to supplier is what is happening. You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no. Yes, but return goods to supplier and bank the refund. Bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debit. And we are returning goods to suppliers. We have returned goods to suppliers. So it is called purchase returns. It is called purchase returns. Correct? It is purchase returns, not supplier. Yes, this is not true. This is not return. It is purchase returns. Purchase. So refund money to customer by check for goods return. So it is this is sales. So when we have sold the goods, but we have received that. So it is exactly reverse of sales. Sales, sales return, and in the credit bank because money will go. So carriage inward paid by check, whether it is carriage inward or carriage inward, money always will go. So carriage inward, we have to specify whether it is carriage inward or not. Carriage. So carriage outwards, carriage outward is also whether it is carriage inward or outward, it is always specified. So money will always go from there. So you will be refunded goods to seller and bank the goods. So you have received the money in bank. Okay. And purchase returns will be paid. Purchase returns are opposite of purchase. Purchases are debit, right? So purchase returns are always paid. So this is how it is. So this is activity 1.2. So we will continue in the next class. Students, welcome. So before seeing this complete video, what you can do is you can just have a look at you can try solving this question. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you receive, when you purchase, you receive. When you rent receivable, obviously you receive. So it will be debited. Sales returns, you don't receive. Wages you don't receive. So this is nothing you receive. Amir bought goods for resale and paid for the goods to the board, which entries in the receipts. Delivery cost. Amir bought goods for resale and paid for the goods to the board, which entries in the receipts. Other delivery cost. So then, when you're selling, I mean, not goods, what you buy, you pay carriage goods. So see, the trader takes money from the business bank account for personal use, which entries record this engagement. So, we will go. So it cannot be you receive. You receive you do. When you receive you do. So obviously this cannot be done. This cannot be so these are practice questions for David and Vince later. So what you can do is just I will look at this problem. So below are the financial transactions of all the ledger amounts and all the foreign financial transactions. All transactions use the they are coming below the date according to purchase machinery, paid non-goods. So paid carries the goods, sold goods, paid for age of 18 so so what you can do is you can try out this question and suppose you have any doubt or if you are unable to do it so you can leave a comment in the description the comment section of the video so yeah, I will just so I will not go so trader dear friends, welcome to Shaja's virtual class. So today we'll discuss activity 2.0. So this is David Hopkins' latest book, book. So we'll start. So below are the financial transactions from Max Business. First the transactions to religion costs. All goods okay, so all goods are bought on sold on credit. So basically, so no bank account is involved here. So other than other than cash, I mean cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat it is somewhat complicated. So but it's easy if you understand the main concept here. What is the main concept? So basically, we need to know the personal account. The personal account. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar. Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales returns. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 legend codes. Basically, we need to prepare 8 legend codes. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency date and the currency. Always. Okay, write always the heading. So which account you are preparing. So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased, and it is on October 1st, 2000. So purchases. So purchases account debited with 2000. This is how this is what it means. So a lot of students what they get confused, So they write something here, no. So the thing that if they have debited, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited. and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always date. You have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused like in India. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See debit 2000, credit 2000. Obviously debit is equal to credit and one account is debited, other account is credited. So this is what is the first thing we learn in accounts, like one should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $3. So say sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Wait. October 2nd. So is always credit. This side is always debit. So how much? 300. See, sales is a revenue. Sales is always credited. Credit on incomes and gains. Sale is always credited. Sale account is credited by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing, what is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in goods. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Yeah, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. Say nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in credit what goes out that also they write. But in personal account they miss. They get confused. They think from the point of view of maths business they try to think what Max is doing, what Max is doing, whether Max is giving, Max is receiving, or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is what this is very very important. Okay, now it has been clear to you. So now it is everything is easy. So then the account the entry is complete. Next. So sales account is done, Ali's account is done. Now come to The next one. What is the next entry? Return goods to Tina that had cost to unit. So now we have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited to credited. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200. On what date? On 4th October. October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This is always debit. This is always credit. Always in dollars. Always in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. This is how you have to do. There are so many ways of removing this. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns 200 with the debit to Tina. This is how you have to read and you have to understand. You have to understand accounts. Very important so that the logical flow of concepts is very clear. Okay. So very clear. Logical flow of concepts is very clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is the Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date? Date is very important. 8th. 8th. From whom? From Lim City. Yes, so you are ready. So purchase account is debited with Lim. Purchase account is debited with a credit to Lim. And Lim account will be credited. It is Lim account. We have to prepare Lim account. So October. So why are we creating Lim? Because we purchased from him. Understood? This is how we have to understand the concepts. Very clear, very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to owner for 1100. Sold goods to owner. So when we sell, obviously owner will receive. So the owner is the receiver. Account owner receives. Owner receives. So owner receives. So owner account will be debited. Debit the account that receives, right? So owner account will be debited and sales account will be credited. Sales account is already there, so we have to prepare owner account and we have to write in sales account. So owner account and sales. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold him. Sales. Sales. Owner account is debited with sales 1100. So now owner account is debited, sales account is already there. So a sales account, we have to write it in sales. Owner account, October 8. Owner account, 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10th. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. So credit the giver. So we have to Ali gives us back. Ali gives. Ali gives us back. We have told him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. Is the giver. Credit the giver. Is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. One more about sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly gross up. It is always a credit. So here now and again, and it is on October 11. And what is the amount? Total value 300. We have rate. Sales returns 300. So it is no more. So we have written everything. So sales returns are 300 debit. Sales return account will be debited with US account credit. So this is how it is. Okay. So next, this is activity 2. So now what we can do, we can try working out activity 2.2. So below are the financial transactions for Penn's business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods printing that cost 5,000 less trade discount of 15%. So sold goods to leave for 1,000. So return goods costing 500 less discount to 10. So purchase from V that cost 4,800 from trade discount before trade discount of 20%. Paid thing normal note, paid week for goods order 15 November, receive full payment from V. So what we can do, we can try working on this question on our own, and in the next class we can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business, Peng or Peng, whatever. So business post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Ting account, Ting account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is the 45. So 45, 515 the 45 means 15% of this. 45, so 4 and then 65. 65 or 55? 55. Correct, no? 5, 15 the 45. So 55. 55. Okay. So purchase goods from V. So again purchases, purchase account is already there. So cost 4800 less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. 3840. So 3840. So you have to record it at 3840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from lay. So that will also be recorded in bank account. So how many accounts should we open? One, one, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4250, 4250. Because purchases is an expense, so expense account is always debited 4250. So date, always you write the dollars. Amount you have to always write, don't forget to write the dollars. And what is the date? November 1, and it is sold to, it is bought from Tinge. So November 1. So see, purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So, so Tinge account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next, the entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next, sold goods to leave for 1000. Sold goods to leave, sales and leave. Sales account. sales account and leave account. So how much is sales sold goods to leave for 1000 and November 5th. November 5th. November 5th. 1000 credit to sales because sales is an income. So credit all incomes and gains. So 5th. So leave because leave is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting Lee? Lee because we have sold him sales. So we have sold him. So debit credit. Sales account will be credited because it's an income. Lee account will be debited because he is the receiver of the goods. Okay, then comes next. Next. Return goods costing 500 less discount to 10. So we are returning the goods worth 500, but after discount it is 455. So return goods means these are purchase returns. Hinge account is already there. Purchase returns, hinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Pinj. We have returned to Tinj. So Tinj. So what we have to do? We have to debit Tinj. Now we have credited purchase returns. Now we have to debit Tinj. Tinj we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinj. 4 and always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 November 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from where? V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So November 15th. Number 15th. So 3840. So why we are crediting V? Because we have purchased. Because we have purchases account. We have to credit V with purchases. 3,840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid we for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay we, and we have to receive from we. So received. 20th we have paid to tinge and we. 20th we have to pay. We have to pay to tinge and we. So bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to pinch and we pinch. How much we have to pay to pinch? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away. 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th. We have received 1000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee. 1000 from Lee. Oh, that's all. So we have finished. What else is required? Below are the financial transactions for Penn's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself, then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything, so there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, We have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited, Dia account will be debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Jones Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are called purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier. So they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So we will receive joint limited will receive. Receive full payment from DIA less cash discount. So we have received payment from DIA. Receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Allen for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount, so that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is activity 2.3 David Hopkins, the latest book. So, okay. Dear friends, welcome back to Shasha's virtual classroom. This is a practice questions from David Hopkins, lesson number 2, credit transactions. So which of the following transactions, so before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or coming. Cash sales, money doesn't go or coming. Payment to a customer. So when we pay, obviously money is paid, this money is credited. So bank account is created because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, we will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded to 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. So in Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st of July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded, okay? So will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the, so it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasa's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books or books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is, so then purchase goods from Crane 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you are sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded at 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Crane. So to enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. They record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. They record all purchase returns and cash book. Cash book. To record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of payment, 3 books of payment, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, frame account, discount received account. So these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come, name of the supplier, because we purchase from supplier. Name of the supplier, invoice number, amount, and others. Okay. So first, what is the date? So we have purchased on 1st November. Number 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it will be recorded at 8,000. See, remember always, paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from train. Again, purchase goods from train. So again, goods from train. That is on 2nd November. So 2nd November from train. So the amount is 14,000. Amount is 14,000. Next, again we have purchased goods from Cora for 16,000. So rate discount of 20%. Again from Quora, what date? It is on 5th November. No, purchased on 5th November from Quora. So how much? What is the amount? $12,800. So what is the total purchases? So 18, 22, 34,800. So these are the total purchases. This is purchase journal. Now we need to record, okay, purchase returns journal. Purchase returns journal. So what is the date again here? We have to write the date. We have to write name of the supplier. So so what date? Return goods on 4th November. So number 4. So what is the amount? 320. So from whom we have written? Quora. And we received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at that time you may need this knowledge. So at that time you may need this knowledge, because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book, what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. So this is discount column, this is discount, this is cash column. So it is in dollars. This is also in dollars. So here, next first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Prem. So we have paid to Cora and Prem. So we have paid to Cora, and Prem. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, 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 returned, purchased, returned. So 8,000 plus 4,800 minus how much you have returned? You have returned 320, what is 320? So this gives 8,000 plus 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay. You have returned goods worth 320. So what is the discount you will receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800 and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of trade is cash discount will be different. So in this case, here also it's 5% cash discount, here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to claim how much you have to pay? So the entire amount you have to pay. So claim is 14,000. Discount is 280. Discount is 280. 14,000. Claim 14,000. Minus 280. 13,720. So you have to pay 13,700. So this is the amount you have paid to claim. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November. So we have made the payment of November. So this is the cash. This is how you have to receive record. So discount column 1024 paying 280. So cash. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts you need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10th. So what is the date? What is the amount of purchases? Total purchases. We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. I mean purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So we have to write 34,800. 34,800 purchase journal. See, this logistics is very important. So when you're doing control accounts at this time, you'll come to know. So you have to reconcile. So many. It's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but when we enter it in purchases account, we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns, journal. So what is it? 320. So now we have to prepare other accounts, Cora account. So we have purchased from Cora, so Cora account will be credited. So always write the amount. So the amount Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. First and 5th. So on 1st it is 8,000. On 5th it is 8,000. So this is purchases. Purchase. This is purchase. Remember you are writing purchase here, not purchase only. Okay. Purchase. Purchase 8,000. Purchase 4,800. So here this side. So it will be. So this is now. Because purchase journal, it is a journal. Okay. So purchase journal. So this is core ledger account. So now next, what is it? So what did you return? I returned on 4th November. So how much? 320 is 320. So next, frame account. So how much is frame account? The frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Okay. So now come to discount received. So again discount received is again. So discount received is again. So it will be created. So individually you have to write, or you can write the total. So, so discount received is 1304, 13,004. So we have to record that discount received 13,004. So number 10. So cash book. So right, that's it. So 1,304, not 13,004, 1,304. So that's also discount received. So what else is there? So I have told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and book ledger also. So cash book is both book of prime entry and ledger. So no more it is not required since we have already prepared. So that's all. So that is the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important, prerequisite for you to score good marks. Welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of English cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at looking at this particular session, you can just try working out the problem on your own so that your understanding is clear. So always try to work out, compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particular, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever the details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between, so there should be one line. So again similarly this side also there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount received one column, cash one column, bank one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit. This side is credit. So the date, whatever your particulars. So first you write this till here. So copy you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in Lee's cash book. April 1st, cash sales 1000. April 1st, April 1st. Okay, so one more thing. So whatever we receive, we have right here. So all we received, we have right here, and whatever we pay, we have right here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account, so this is discount allowed. So this is discount allowed discount. So this is discount we received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay. So this side because when we pay at the time we receive discount. No, we receive. So it's a credit. So but when we receive at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale we write here. So all whatever we receive we have to write here. Whatever we pay you have to write here. So this is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is receipt or paid. So here they are also discount received they are written. Okay, so discount allowed. So here if they are not written whether it is receipt. So this is just for you to remember. So just for you so that you understand it is easy for you. Okay, so don't write this. So don't write. This is for you just you for you to remember. So don't write. Okay, so don't write. So receive cash when we sell, we receive. So then, what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a so cash account credit what goes out. So what date? So it is on second April 2nd. So second. So credit what goes out. Electricity. How much? 100 cash. Credit what goes out. Cash has gone out. Credit what goes out. So next step. So we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on third 800. On third sales 800. We are receiving when we sell we receive no. So receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So bank the cash means we are depositing cash into bank. Cash is going out. Cash is going out, and money is coming in bank. Banked cash. So money is coming in bank. Banked. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful. Okay, so a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple. That's it. Okay. So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So withdrew 900 from bank for cash flow. So we are taking out money from bank. Okay, withdrew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So withdrew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash. Cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited. Cash account will be debited and bank account will be credited. So understand, a lot of students commit mistake here also. So they get confused. Understand this. This is very, very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep in office. for cash expenses. So that is the meaning, okay, to keep in office for cash expenses. So we have to record, withdraw 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What at 6th? On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from bank. This is payment, right? So money has gone out from bank. So against this, here you have to write cash, and this is called contra again. So again this is value here. Here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here against this you have to write bank. So be careful. So against this you have to write again contra. Why? Because it is hitting cash on one account and bank on the one another account. Same. So very careful. Okay. So lot of students commit mistake here. So this is very important. So this is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked. Okay. So very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay. So the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance done. So this side here cash. So balance done. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800, 1800 plus 900. So 19 plus 8, 27. 27 minus 1500. 2700 minus 1500. Okay, so this will be 1800. So it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. Crystal clear. Okay. So this is how it is. So 1180. If you add all this should be 10700. So in other words, when you are balancing, So both the sides should be same. Okay, so here balance brought down. So balance brought down. Whatever is carried down here will be brought down here. So 1180. So this one is 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So we'll be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay, so very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books, or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book, would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to call account. So we will debit motor vehicle and credit. Why? Because debit, what comes in debit, asset is coming in, So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they have not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative. Then purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So, okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out, so it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Debit. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B. Jones, a supplier, has been posted to C. Jones' account in. So what is the right entry? Received from B. Jones. So we have received credit note. So we have to debit B. Jones, a supplier. So we have to debit B. Jones. What is the right entry? We have to debit B. Jones. So to understand this again, we have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B. Jones. Okay. Received from B. Jones. So we have to credit B. Jones. credit note. We have to credit visions or debit visions. We have received, no? So we have received means we have to debit visions. We have to debit visions. Debit visions. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously you have to cancel this and you have to bring this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited the season, so the wrong entry. So when you credit season, this entry will offset. And to give credit, you have to debit. So we have to debit from vegan. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from